Ladies and gentlemen, Kim here. Welcome to the daily update. Hope you guys had a good day trading today. Market is up 1% on the S&P. Market continues to see a melt up. This is pretty much that's what's been happening here in the last couple of weeks, as the market is going even faster and faster, and we're going pretty much vertically now. We talked about the analogy of driving a stick shift, right? You can see some first, second, third gear, second gear here, some up and down, third, fourth gear, and we're getting into the fifth gear now. It's going more parabolic, and there's no jerks here at all. Even here, it's been a lot of grindy moves. And now looking at this here in the last couple days, several days, pretty much a parabolic move at this point. I don't think we've seen this kind of buying pressure since this market bottomed in March lows, not like in this fashion. And with that, you know where the oscillator is. Oscillator is still oscillating back and forth at the top of its band. Nothing's wrong with this oscillator. There's nothing wrong with it. This oscillator is telling us how bullish the sentiment is, how this buying pressure is so adamant. Bulls are not willing to back down, not even a little bit. And as you can see, it's getting faster, faster, and faster. That was the last time we saw any kind of decent sized pullback after March lows and the early June. Market pretty much went like from 230 to like 320. In several months though, April, May, and June, right? And then we saw that abrupt decline, about 6%, 7-8% correction, I believe. Initially, we bounced, came back, we did little double bottom there. That was the double bottom neckline. We talked about that higher high there. And then there was some jerkiness, right? This was that bottoming process, right? And then we cultivated at a higher high, and there's bit jerkiness here. You can call that a first and second gear, and a third and fourth gear as it gets smoother and smoother, and we're getting into very smooth, almost parabolic move here. I don't know where the top is. Nobody does. And if anybody was looking for a top in the last couple months, it's been a very, very difficult market for them. Oscillator is slightly crossed down, but at this point it's almost difficult to say that cross means anything, because we saw a cross here, right? And while the oscillator came down to find support, creating little space to make itself to move higher, we barely pulled back. The market actually moved sideways for a couple days or so, and then continued higher. So we saw that pull back. Oscillator pulled back, but the price never did. Found support on that gap area there. Again, no coincidence that we found support right on this support area here. It's been elevated, propped up, oscillating back and forth on top of its band. When this occurs, and this means that market is an extremely bullish sentiment, and the longer it stays, the more the sentiment will continue. And again, I'm not sure when this will all end. At least the first signal that this might end will be this thing breaking below it and start coming back down to the bottom of its band. That will be at least the first signal that we may be seeing end of this rally. Right? Does not mean the market has to completely crash. We very well know that market can grind higher, but at the same time, we know that market can, correct through time or price. So we may see a pullback to maybe here. That's not a huge pullback. If we do see a pullback, that will be what from here. Let's say we see a pullback tomorrow. That will be only 2.4% pullback. That's nothing considering the fact that we are up about 60% since the March lows. And then maybe wait for that midterm moving average to come and get it, and this thing kind of stays up here consolidating back and forth for a couple of months. Is that a possibility? Yes. This is why it is very, very extremely difficult to try to make money on shorting, because market can correct through time. And that's going to be difficult. Because when you're shorting, you're looking for some big drawdowns. Like you're looking, well, just because the market is up so much, people think that it must come down. They're looking for like crash. We're talking 10, 15, 20. It's not always the case. Actually, if you actually go back and look, after a steep decline, right? After a steep decline, which we saw in March, when the market gets up, get to a new all-time high, and then that thing kind of, get into that melt up type of move, which we're seeing right now, they don't always come straight down to like 10, 15, 20% correction or 12% and 15%. Usually what happens is they'll pull back a little bit and there will be another move. Pull back a little bit, there will be another move higher. So it gets extremely, extremely difficult to profit on a short position. You know what I mean? And I've explained it yesterday how you should be managing your portfolio in this kind of climate, in this kind of condition, how you should be positioned, how you should be strategizing in this type of environment, right? So you can go and watch that last night's video to learn more about that. But it's not a whole lot I can say. At this point, technical doesn't matter. At this point, fundamentals doesn't matter. It's all psychological. It's people are chasing up here. It's because maybe I think a lot of people, they missed out a lot of this move, right? Because that March lows was very scary. They might have completely liquidated their portfolio and now maybe getting back in. And at the same time, a lot of newcomers are coming in, potentially seeing this market was just where it was, March lows. And now, you see, all these media and people are just understand, getting all these attention on Apple, Tesla, all these tech stocks. And if this is a bubble, right? I told you guys yesterday that I have reasons to believe that this isn't like 1999. But if people thinking that this is going to be a start of bubble, right? Then we're talking we could see another 50, 60, 70, 80, 100% move to the upside. If you go back and study 1995, 1996, 1997, 1998, 1999, obviously it ended in 2000. But before that thing ended, you know what happened. So maybe that's what they're trying to do. They were trying to ride this for a quick money in the next, I don't know, maybe remainder this year, next year, a couple years, who knows. One thing I know for sure is I don't know where the top is. That's one thing I know for sure. And I wouldn't be trying to call that or trying to somehow, profit from that. It's okay to have a couple hedges. And when I say hedges, I mean like you're already long. You have many positions you've been accumulating in the last couple of years, maybe in the last couple of months also, and you want to hedge against it a little bit. I'm not talking about like completely hedging your entire portfolio, no. I'm talking about just having couple hedges, maybe have a couple hedges on VIX, maybe some put options and things like that, just so that if we do see some pullback, you can maybe use that capital, use that gains to buy more longs after a pullback. If that's the, your objectivity, putting some hedges, I think that may work. You're not going too crazy if you already have many longs on top of it though, right? If not, I know it gets painful just watching this thing going without you, but market is great at creating this kind of environment where it's going to make you want to chase. And sooner or later, those chasers usually get burned. So I don't recommend chasing up here, but continuing to manage risk, what you already have. And I think that's the best bet. If we do see a pullback, we got 341 gap here. Gap fill is probably, I'm going to make this here. Gap fill at 339. Gap area 341. We do have my short-term moving average 344. If this is overbought, so potentially we see a pullback, but in this kind of environment, who knows if we see something like this now again here, right? That will be total nightmare for bears if this thing starts to do this now, right? And so we're witnessing something this market has never produced before, right? And, but we can all agree by the, with this price action that we've been witnessing last couple months, that March lows pullback was huge trap. this market has deployed to inflict fear, but it was also a huge opportunity for those people who saw it. And market will give you another chance, probably not like what we saw in March, but market will give us another chance, maybe another 10% at max, potentially 15. You know, I'm looking more. Somebody was calling, but anyway, so yeah, so I mean, maybe that's the thing, is that I don't know how much pullback there's gonna be when. I mean, first of all, I don't know when we're gonna see a pullback. Second, if we do see a pullback, we could just be 5%. 5% gets right back up before pulling back another 5 and kind of move sideways. That 5% up and down, you know what I mean? 5% up and down range. So I'm actually preparing for potentially 5 to 10. If it gets worse, maybe 12. You know, but we don't have any kind of evidence at this point. So we want to continue to give benefit of doubt to the buyers. I'll come back for you guys tomorrow. We'll go from there. Enjoy your evening. Good luck trading tomorrow.